Welcome back to Markets Midday. At midday, the markets are not very different from what they were in morning trade. Flat markets, 6,014 is where the index is trading. As you can see, hardly a 0.25% higher and very, very narrow range. It's moved all of 15, 20 points today. And even individual stocks are not showing too much of activity, at least as far as the heavyweights are concerned. Broader markets are showing a little more activity, but even that is constrained by a lack of volumes. 50,000 crores have we done? And we are already through half day of trading. Yes, just about 52,000 crores. So it doesn't look like much gets traded as we enter the last leg of the year. Perhaps some activity on the F&O space, but even that not today. Advanced declines are the only positive, as we have been saying. So let's just focus and dig and delve into some stocks that may have some interesting prospects. The stock in focus is Escorts. A couple of things are interesting about Escorts. We are in a record year in terms of harvests. How does that turn out for a company that manufactures tractors? As well, infrastructure is believed to be a promising sector. How is that promise being delivered for the company's construction equipment business, its incipient growing construction equipment business? For all these questions, we have with us Rohtash Mal, the Executive Director and CEO of Escorts. Mr. Rohtash Mal, thank you very much for joining us. First up, just to clear up a little bit of the disappointments of the past quarter, margins dropped considerably. There were some other expenses. Why was that last quarter disappointing in terms of bottom line?
Well, if you see this on a year-to-year basis, we are actually ahead than the previous year. So I don't know where these statistics are really coming from. They weren't disappointing. On the other hand, if you see the year-on-year performance, you could see a fourfold increase in the bottom line, as well as a very, very healthy growth on the top line.
I meant the fourth quarter, Mr. Rohtash Mal.
Oh, you meant the fourth quarter. Look, no, it's not a booking of expenses or anything else. It's just if you do not see this on a quarter-to-quarter basis. You have stocks which you clear out. You have stocks that you build up for. For example, we were and correctly expecting a very good sale in the October-December quarter, which has really happened. So you build up a lot of stocks in that quarter in order to make sure that there are no production bottlenecks. So you have to go into the fine detail of looking into what these numbers reveal. And just to assure you and the rest of the community, things are as healthy as they were in quarter to quarter to quarter, as indeed on a year-on-year basis.
Just a matter of detail.
The current quarter, we are closing.
Yes, sir. Just a matter of detail. There is an entry called other expenses in which you have about 121 crore compared to 82 crore year ago. Was that, that seems to have reduced the profit at the EBITDA level. Anything to worry about on that count?
I'm afraid I'm not. I'm afraid, as I mentioned to your colleague yesterday, we are just about closing this this quarter, and these results are being formalized by the board. I'll be very delighted to talk to you in the course of the next few days on the numbers and so on. All
right. Well, let's get to the broad business, Mr. Rohtash Mal. It is a record year in terms of rainfall and probably in terms of Kharif harvest. How was business, both first half as well as, more importantly, second half orders?
Okay, business is not good, it's much better than good. In fact, if you notice the last 12 months of performance, we've been clocking growth rates of between 30 and 35%, obviously year-on-year basis. And if you see the trend in the last few months, you're looking between 18 to 21% sustained volume performance. So the Kharif, not only the crops, the matter of the minimum support prices and so on, are also giving a lot of boost to the sector and a lot of purchasing power to the farming community to mechanize itself, which is really the order of the day, and make sure that farm productivity remains as the community intends it to be. So I am looking at prospects that are robust, that are sound, and not just for the short run. And the reasons for that are, apart from the minimum support price, which the government has managed with, to my mind, with great alacrity. The fact of the matter is that, and which is also fueling urban demand for a variety of goods. Fact of the matter is that a lot of attention is coming from Krishi Bhavan, as indeed from the government, and that is to my mind, on policy making, on making sure that this sector is unbottlenecked.
Okay.
If you noticed over the last 2 years, the kind of outlays that have grown on the sector have gone from 275,000 crores to 375,000 crores. And I dare say that that trend is going to continue. So the focus on the farm sector, the lack of availability of manpower is also resulting in greater mechanization.
Okay.
And in a sense, if I might just go out on a limb, the farm sector is getting rainproof, if you like.
Okay.
To an extent, of course.
Well, one hopes that happens with Godspeed. But coming back to your numbers itself, you gave me some numbers about tractor sales growth. If I have to look at overall revenues, some people are penciling in, I mean, I'm reading out from analyst research reports, about a 15-16% growth in revenues in FY11 and a further 12-13% in the next year. Is that a fair estimate?
I would say it is slightly conservative.
Okay.
I'm personally a little more bullish than that. A little more pink, I think, needs to come on these numbers.
Okay.
And I'm basing my my personal forecasts on the fact that the macro indicators or the macro variables that are fueling this sector are actually quite robust.
Okay.
As I mentioned, MSPs is one of them. As I mentioned, the lack of availability of farm manpower is one of them. And as I mentioned, the government focus in itself on the farm sector, which is getting better and better by the day. So I would say things would look better than this.
Okay. Let me come to the other business of yours, which also depends on investments by the government, or at least its infrastructure interest, construction equipment business. It takes, what, 30% of your revenues these days? And how is the order book and the flow of orders there? Is it showing a similar expansion as tractors?
Well, the order book is very sound. We've just launched a backhoe loader, and the orders for that are incredible. I think 2.5-3 months is the kind of waiting time that we are seeing, delivery time. And yes, this sector particularly also is fueling a lot of growth for us in the construction equipment business. Very robust indeed.
All right, Mr. Rohit, thank you very much for joining us with those details. Okay, so that's a positive, fairly optimistic view coming in from Escorts. Let's take a break. We have some interesting details for you after this break. A mix of the IPO and the secondary market. Some recent listings have taken a beating. We'll give you some interesting details.